The technology industry has been a wildly successful sector with record gains since 2020. In addition, e-commerce and software development are seeing rapid growth due to our new virtual reality technology and a sharp increase in online activity. This makes tech stocks a great investment opportunity. So, as long as you do your research and understand what a company has to offer, you will most likely profit in the long run. Hello and welcome to Upstep Financial. Join our channel by subscribing and clicking the bell icon to be notified of our new videos. Then, stay till the end if you want to know what's going on in today's stock market. Today, we'll take a look at the top tech stocks to consider investing in right now. ACI Worldwide. ACI Worldwide is situated in Florida and creates and markets a set of software products mainly aimed at enabling electronic payments. These products process payments for retail banking customers, retailers, utilities, and healthcare providers, among many others. In those lines, ACIW is more concerned with being at the center of mobile payments infrastructure than with having a mobile payments app with a large market share. In addition, ACIW takes a unique approach to cashless transactions, so its innovations focus on enhancing fraud protection and lowering interchange fees, which are payable to a merchant each time it digitally charges a consumer account. Inside a period of 24/7 payment processing and a continual effort to decrease friction and inefficiencies in payments, ACI Worldwide is a very appealing prospect to many investors, as it currently powers digital payments for over 6,000 businesses globally, executing $14 trillion in transactions each day. It isn't just a story anymore. ACIW's fiscal year 2021 profits projection is $1.15 per share, nearly twice the 62 cents it posted in FY 2020. Furthermore, earnings are anticipated to increase to $1.28 per share next year. Microsoft has emerged as one of the most prominent names in technology during the last decade. Productivity and business processes, intelligent cloud, and more personal computing are among its segments. As a result, it is a sought member of the Dow Jones Industrial Average member. In late April, the tech giant announced its FY 21 third quarter results. Revenue was $41.7 billion, a 19% increase year on year. The operating income grew by 31% to $17 billion. Adjusted net income increased 38% year on year to $14.8 billion. Earnings per share grew 39% year on year to $1.95. At the end of the year, cash and equivalents totaled $13.7 billion, a 17% increase year on year. The Street attributes Microsoft's success to the organization's diverse operations. After Amazon and its web service business, Azure has grown to become the world's second largest cloud infrastructure platform. In addition, the Office 365 Productivity Suite and CRM platform Dynamics 365 are profitable cash cows with room for expansion. MSFT shares closed out 2020 at $222.42 and reached an all-time high of $263.19 in late April. However, it has now given up some of its recent gains. Despite this, the stock rises 17% year to date, and the market cap is nearly $2 trillion. The forward price to earnings and price to sales ratios are 30.96 and 12.29, respectively. MSFT stock may not appear to be cheap upon first look, but this company is still expanding rapidly, even with its sheer size. Therefore, investors that are interested in purchasing the dips should do so. Advanced Micro Devices, Inc. AMD is a global semiconductor company headquartered in Santa Clara, California. For more than 50 years, the business has led the way in high-performance computing, graphics, and visualization technology. Its products are primarily used in the gaming sector as well as data centers. It has hundreds of millions of customers, and numerous enterprises and research institutes use its technology. Interestingly, the firm has recently revealed that its EPYC processors would power the new Hewlett-Packard Enterprise Co. Allegra 600. The Allegra 600 is a cloud-based system that supports cloud-based business-critical applications. It will use the AMD EPYC 7002 series processors, which provide up to 3 times the performance of the prior HPE Nimble storage all-flash arrays. Wait, hang on tight because it doesn't stop there. Recently, the corporation has also confirmed its collaboration with Mercedes-AMG Petronas esports team. AMD will boost the squad for competitive virtual racing using championship-level technology and performance. This shows that AMD is committed to pushing technical limits to deliver the most incredible gaming experience for everyone. Considering all facts, would you plan to add AMD stock to your portfolio? Palo Networks. Palo Alto Networks, located in Santa Clara, California, is a straight-up cybersecurity company. The company primarily offers security appliances, subscriptions, and support to businesses and governments. On May 20th, Palo Alto Networks released its fiscal year 2020 third quarter results. Total sales increased by 24% year-on-year to $1.1 billion. In addition, adjusted net income grew by 22% year-on-year to $139.5 million, or $1.38 per diluted share. The increased digitization over the last year has brought cybersecurity to the forefront. As a result, Markets predicts that the sector will grow from $152.71 billion in 2018 to $248.6 billion by 2023, at a compound annual growth rate of 10.2% 2018 to 2023. Palo Alto Networks products are primarily available as subscription services. As a result, they generate a consistent stream of cash flow from customers, which is a business model that Wall Street admires. PANW shares began trading in 2021 at $355.38. It achieved its 52-week high of $403 on February 19th before dropping by roughly 20% during the next several weeks. It is now trading at $365, up approximately 3% year-to-date. It has increased by 65% in the last year. The current forward price to earnings of 51.28 and price to sales ratios of 8.82 indicate a speculative value. Thus, even though PANW is a growth stock, potential investors may discover more excellent value around the $350 range. Intel Corp. Intel creates computer components and associated goods such as CPUs, chipsets, server products, memory, and storage. Its solutions are intended for various existing and future computer technologies, including 5G networks, cloud computing, and artificial intelligence. Intel employs around 110,600 people worldwide. On May 3rd, the firm announced a $3.5 billion investment to expand its manufacturing operations in New Mexico, emphasizing innovative semiconductor packaging technology. Construction is anticipated to begin in late 2021. Axcelis Technologies. Axcelis Technologies is a semiconductor service business that makes ion implanters, the fancy name for the device that is essential in the manufacturing of microchips. If you're into science, you'll know that ion implantation is a high-tech coating process in which ions from one substance are implanted into another solid material to modify the physical and chemical properties of the surface. Axcelis is perhaps a niche player. It lacks proprietary microchips and fancy consumer-oriented items. Thus, it is just a glorified middleman. Nevertheless, given recent news concerning supply chain disruptions and worldwide microchip shortages affecting everything from car manufacturing to household appliance sales, it is clear that Axcelis Technologies is a tech stock in high demand today more than ever. For a quick view of this development route, look at the basics. Revenues for the current fiscal year are expected to increase by 17%, followed by another 11% the following year. Simultaneously, current year earnings per share are expected to increase by more than 44% this year and 32% next year. As a result, Axcelis has exceeded the S&P 500 index by around 58% in the last year, compared to about 37% for the S&P 500 index over the same year. However, with some industry insiders anticipating that the semiconductor disruptions would last up to 2 years, this tech stock might see a continuing rise from 2021 onwards. Twilio. Twilio is a company commonly referred to as just a cloud communications platform or software as a service provider. However, such labels are not a favorite image for this San Francisco tech icon. A more appropriate description is that Twilio lets software developers link their enterprises using advanced, decentralized communications platforms such as cell phones. text-based customer support chatbots for businesses, social media feedback integration, mobile phone self-check-ins for hotels, app-based loyalty programs, and other engagement solutions are some of the things it has to offer. TWLO has used both sides of its experience and history in its present products and operations. The firm has also demonstrated its value proposition in a significant way in the midst of the pandemic's social distancing issue. Twilio saw sales increase by 55% year-on-year in FY 2020, and analysts predict 44% top-line growth in FY 2021. Furthermore, based on earnings projections for next year, this company, which only recently went public in mid-2016, is on track to become consistently profitable. Hardly any surprise the stock has risen about roughly 65% in the previous year, and, in the long run, has soared from its initial public offering price of $15 per share to more than $300 per share today. With that being our last for today's list, I want to say that investors should consider that research and diligence pay off in the technology sector. Understanding a company's products, particularly their benefits and weaknesses, and those of its competitors, might provide an investable advantage. Clearly, this is a field where the intricacies are significant. That concludes today's video. If you got anything to share, feel free to comment it down below. As you leave, please give us a like, share, and also subscribe to our channel. We'll catch you on the next video.